But this brings us to a very interesting point. You see, when you have so much of liquidity, when you have people constantly investing, let's say from your fund point of view, right? We're putting in money. Now, you're going to buy it at the current exchange rate. In future, what will happen is that the exchange rate obviously is going to be against us. We're a developing country. We will depreciate for sure. I mean, it's not going to be that we'll appreciate unless something goes wrong with the US dollar. Only then we'll appreciate. Otherwise, most of the times, Indian rupee will keep depreciating. So there is a currency risk also that in some sense happens, right? So do you have some sort of a hedge mechanism that you put in? And there was also a question around this. But how do you guys manage this risk? So today, if you're buying something at 75, now let's say Amazon, for example, I'm just using a name just for the sake of an example, that goes up 30%, over let's say about a 3-year period, just as an example. The valuation of Amazon moves up 30%. Now, in the next 3 years, what might happen is the rupee depreciates by that much. So what will happen is today in dollars, we've made money. But what is happening at the same time is that because of the Indian rupee depreciating, you're not really seeing that impact, because the moment you convert that back to Indian rupees, what will happen is I mean, how would you manage this currency risk? And it could go against us quite badly, right?
So, yeah, as you said, traditionally the Indian rupee has depreciated by around 4 to 5% every year over the past few years. So, what we do in our fund is that, say, if we are buying dollars today at 75, we'll hedge it by selling currency futures on the exchange. On the same day, at the same minute, we'll sell those amount of dollars in the future market. So, say basically we are buying dollars at 75, at the same time selling currency futures for the next month at 75.5, for example. So
Right.
what we are doing is that we are capturing that yield or the depreciation upfront, and what we do is we get a 3 to 4% carry on this. So instead of getting an annual depreciation of 4 to 5%, at the same time the rupee and the dollar bouncing around, you get that volatile return. So what we do is we get a smoothened return of 3 to 4% over the year, and that's how we manage our currency. So yeah, that's the basic.
Oh, I see. Okay. So that means one should not worry too much about it. So even if there is depreciation, because you are hedging it, you are constantly, you bought dollars, you sold a currency future. So in that sense, whatever 4% depreciation is going to happen onto the dollar asset is basically hedged because you've already got a currency future. And this is pretty much a standard industry practice, or is it something unique that y'all are doing? Typically exporters would do this kind of stuff, or importers would do this. I don't know. So is it very unique, or is it something special, or generally industry kind of a
Yeah,
standard operating procedure?
yes, that's correct. So, as you said, exporters and importers do this. Most of the international funds that are there in the industry do not hedge the currency. Since the rupee has been depreciating against the dollar, it hasn't impacted them till now. But as and when the rupee starts appreciating against the dollar, it might impact the returns of those international funds. So this is something which is different in our fund, and we have been managing this well. So we hedge about 70 to 90% of the foreign exposure that we have. So that's the broad range that we have. So we don't go above 90%, mainly because, say, if the foreign stocks appreciate by 10% tomorrow in the market, then the hedge, we might be over hedged, and we might take currency exposure directly. So that's the broad range of 70 to 90% that we manage.
Correct. Okay. That's great. And, we've almost come towards the end of our, little show today. So I have this basic question which I ask all my guests who come and who represent, who are product manufacturers and who manufacture these beautiful ideas where we put in our money and things like that. So, we've been talking about restarting India. We've been talking about reset India, and, all sorts of acronyms that come in from the government, come in from the private sector. A lot of us are still kind of working from home, or, we've started working from office, but everyone's, the kind of fear is gone down, but it's not eliminated. So we don't know. Suddenly the fear also spikes up. It's like the volatile index. Fear also goes up and down every now and then. So in that sense, what is your house view? What is the fund view? Should people be like really worried? I mean, we know there are standard operating procedures. You put in 100 rupees today, do an STP, do a systematic transfer plan, move the money into the fund. But the question is, should we do it 1 year? Should we do it 3 years? Should we sort of wait? And or should we just go in and attack because nothing's wrong and everything's back? And like you mentioned, the discounted cash flow of 25 years is already working in your favor, so everything should be good. So what kind of a strategy would you tell our investors? One, And the second thing is, what is the view on the reset of India, or for that matter, the reset of Indian companies? How is the future going to look like? And I know it's a little bit of a crystal ball gazing I'm asking you to do, but there's always a view that everyone has. It could be personal, it could be a fund view, whatever you think best suited to answer here.
Yes. So whatever I am saying right now is my personal view. It's not the fund view.
Right.
Basically, what I see over the next few years is that we'll see some disruptions in some of the sectors. So something like auto or power, or there will be some sectors where we see disruption. At the same time, technology is something which will come to the forefront, mainly because we have leapfrogged about 2 3 years in these last 6 months time, post COVID. So everything is happening virtually, just like your forum, which is happening virtually, which used to happen personally. So yeah, we have leapfrogged technology to some extent, and there will be some sectors which will do well. At the same time, what has happened is that due to the disruptions in after COVID, there has been some supply chain issues in the small and mid cap companies, and or MSMEs for that matter. So what has happened is that the larger players in each of the industries have become more stronger, and we'll see market shares in almost all the industries moving towards those top 4 5 players. So the strong will become stronger is what my thesis is over the next few years, mainly because of the disruptions that we have seen in the last 3 4 years. So starting from demonetization to GST to COVID, it has been really hard for the smaller companies, for MSMEs, and the small and mid cap companies. So yeah, that's the main thesis I have.
So that's a very, very interesting observation there. The strong will become stronger, and the weak will have to either reinvent their model, or they'll have to change their business strategy. They will have to rediscover themselves, and there's a lot of that which is going to happen in that space of smaller companies and smaller businesses. So if you're working with a company who's small or who's medium sized, maybe you also want to think about your own personal strategy. I think this last 6 months has been a time where a lot of people have built up a lot of new skills. People have ventured into new activities. There are new business models that are coming up. And from whatever I understand with my work with some scientists and people who are in the space of, climate and science and, technology and all of that, I know that the world is going to be very, very different, and it's not going to be the same normal. So do not think that by February it'll be the same, or by June it'll be the same. A lot of things are going to change. And like they say, the faster you are, the better you will be able to adapt. So adaptation is like one key word, and that is something that we're learning from these companies also. And like Raj said, the stronger will become stronger. So if you're not strong enough, you need to become strong, and that's one of the messages I want to give you, and I want to leave you with that.